Hey everyone, it's Tom here from the WB trading team. Today we're going to talk about how we can optimize basically any strategy by taking two key concepts, what we call the MFE and the MAE. Now you may have heard these concepts before if you've been involved with trading for a while. Basically what they stand for is maximum favorable excursion and maximum adverse excursion. Now before you switch off thinking those kind of daunting phrases, what on earth do they mean, Tom? They're kind of trading complicated speak for basically how optimized we can make our profit and how optimized we can make our stop loss. Now you still might be thinking, not really sure what you're on about here, so this is what this video is for. We're going to jump right in, we're going to explain the concepts and basically show you how we can use them on any strategy to really optimize our return. Let's get into it. Just very quickly before we dive in, if you're still struggling with your trading or you'd like to know more about how mechanical edges are traded, I've put together a free video course for you that will map out and explain everything in detail, along with walking you through exactly how the mechanical rules actually work. If you'd like to watch that after this video, I'll pop a link in the description. You can click through and you can watch that straight away. So to best explain how we use MAE and MFE, we're just going to go through an example. I've set up here a very basic just strategy test. This isn't any strategies that I run. I've just kind of come up with this very quickly, really to show the concept of how we can apply it to any kind of testing, any sort of strategy review. So just to quickly explain, MFE, maximum favorable excursion, talks about how optimized we can make our profit, what's the maximum profit we can achieve consistently on any strategy, and maximum adverse excursion talks about where's the best place to basically position our stop loss. So if we think about stop loss, sometimes you'll be positioning it too wide. So if you're consistently positioning your stop loss too wide, you're basically giving up R on every trade, because we could tighten that stop loss. If the results are still good, then we're improving our R on every trade because the stop loss distance is tighter. And the same thing for our profit. Are we basically going for too high a profit, too wide a profit, and therefore, we're leaving potential trades on the table that could be wins? Or, is our profit too short? Are we ending up with situations where the market is exceeding our profit target on regular winning trades, and therefore those winning trades could be generating us more R, more profits, without hampering our losing trades? So I'm going to try and explain this, as I said, with a really simple strategy here. We've got a setup, and if you've been on videos before, you'll kind of be familiar with how I set my trading journals up here. I've simply just got the strategy rules in the corner here. I always like to put this on my journal so I can remember what I've been testing, if I've been testing multiple strategies. And just to go through very quickly, so we've got a 1 hour chart. We're going to look for an entry on the crossover of the the 100 exponential moving average. Just change that through. We're going to be looking in both directions, so long and short trades. And we're going to use a 2 ATR for our stop loss. So 2 times the ATR from the entry point. Very, very simple, very mechanical. If you're familiar with our style of trading, that's what we focus on, mechanical trading. And I'm going to be looking at just the S&P 500 here. So to give you an example, we're going to take the most recent trade we had, which was Friday the 20th of January. So I'm just going to input this in here, and entry date, US 500. 20.01.23. Direction was long. Entry price, if we have a look on the chart here, was 3947.68. ATR value, we can see at the bottom of the chart there, it is 11.97. Now my journal here set up to basically multiply the ATR by 2, take it away from the entry if it's long, add it if it's short, to give me a stop loss distance there, and I'm going to write down the maximum profit. So in a sense for this one, obviously the trade is still live. We're going to write down what we've achieved so far. Always like to round up or down to give myself a little bit of safety on where the profits is. So we're not going to go for the absolute highest point here, because we always want to leave ourselves a little bit of margin for error. Back testing is always the ideal scenario, as most people know. We want to make sure that we're a little bit more realistic. So we're going to just go on the highest price, 3973. So 3973 without the decimals on. And we've got a maximum R at the moment of just over 1. I'll make a little note in here that it's still live. And that's basically setting up. Now, obviously, to test these MFEs and MAEs, we're going to need quite a bit of data. So I'm going to come back in a second when I filled in a little bit more of this journal. So now you'll see the journal's a little bit more complete. We've got, I think, 12 or 13 entries in it, 12 entries in here now. Just gone back through kind of the recent crossovers on the US 500, on the S&P to find those particular entries. Just change that again to 100, sorry guys. And we've spotted here, obviously, you know, we've got an entry on the 18th before the one we just already recorded. And going back through, I've just recorded them down. So we have a really small batch. I would like to do this for a lot more, obviously, you know. Ideally for testing, we'd want, say, 50 to 100 trades really to start picking through the analysis. But we've got a better idea now, having 12 on the journal instead of just the single one that was still live as well. So what can we do with this info? So as I said, we're looking at this MFE and MAE understanding. So by having the maximum profit price, we've already got a good idea to base our MFE understanding on. So remember, MFE, we're looking for the maximum favorable excursion, the optimal profit that we can look at. So if we're looking down this list, you know, there's a few things I would already look to see. Well, what's the maximum R? So if we're going in very simple terms, just using integers, for example, you know, did it achieve 1 R? Well, we can see here that, you know, this trade, this one, this, here, and here, all achieved 1 R. So we'd have a pretty good win rate if we took a 1 R just based on this small sample size, of course. And the ones that didn't achieve 1 R, well, you know, these weren't really that close. So, you know, we can look at that and say, yeah, even if we tweaked it a little bit in terms of maybe going down to half an R, it's not going to help us here, you know. And always we want to be looking for 1 R really. So could we go any higher? You know, could we go to 1.5 or 2 R, for example? Well, 2 R, we've only got one here that's hitting two trades here. So again, win rate's pretty low. The average R would be pretty minimal. We'll get a +4 there. And obviously all of these will be losses. So, you know, we'd end up on a -6R so far for this, you know, for the amount of data that I've got. So 2's looking a bit unlikely. And even 1.5, if we go down a little bit more detail, you know, there's a few here, obviously. But some of them are quite close to 1.5. So again, based on where we might get in live trading, it's a bit close to that 1.5 limit. So at the moment, you know, what I'm getting there is the MFE of 1 R is looking pretty optimal, but obviously that's before we've had a look at refining anything else. All we've done so far is gather one set of data, you know, using a 2x ATR stop loss, using that first that crossover of the 100, and just saying what's the maximum R. So it would be great, you know, if we had 100 trades or so, be good to see if that 1 R rule was still true. And based on what we've got here, that's a great win rate for a 1 R trade. But, you know, what's it actually looking like in terms of refining other areas? So that's where we could have a look at potentially changing another area, and that's where we come on to the MAE. So we've had a look at profit optimization a little bit, but what about stop loss optimization? Well, we've used a very, very simple mechanical stop loss here, which has proved to be fairly effective so far, you know, using a 2x ATR value. What happens if we just do something, you know, very simple and just say, instead of 2x ATR, what would the 1x ATR value be? So what I would do in this situation is just basically mirror what we've got, because a lot of this data is still going to be valid. And as you can see here, I've just pulled this across to a second set of strategy rules, a second document, kept most of the info we need, obviously the date, the direction, the entry price, because they're still going to be valid for our trade info. But we're going to take our strategy rules, just copy these across to the kind of second journal we've got, stop loss at 1 ATR. Remembering, obviously, I like to have these strategy rules next to the journal that I'm using so I can remember and obviously differentiate between these two. So this will be a process of going through then. Say if we go to the most recent trade we've got, which is here, still the same entry price, obviously, 3947, the ATR value there. Now, what we can do is a couple of things. We can just take the ATR again from here because it's going to be the same value. Copy it across. And all I need to do in terms of my calculation is just put a 1 in there. Obviously, instead of 2x, we're going to be looking at 1x. Move that down. Now, not just as simple as that. Obviously, we need to check if we're hitting any stop losses that we wouldn't have hit otherwise. So let's have a quick look at the first one. So stop loss price of 3935 instead here. So 3935 is about there. And it will be a little higher. Again, I would do this a little bit more accurately if I was going through line by line. But the maximum profit, Well, it still hasn't hit that stop loss, that tighter stop loss. So the maximum profit price we had of 3973 is still valid. And therefore we basically doubled our R. So if we go to the next one, just to see one more example, I'll get rid of that line there. We'll drag up. So that is our second entry on the 18th. We have a stop loss of 3974. So we'll mark that on 3974, which is about there. Same entry point, and again, we're going to get the same result here. We're going to get the same maximum profit as we got on the first trade. So I'll just copy that across 3885 because it hasn't hit our tightest stop loss and still gone down to this lower level here, which we had for our original profit. So again, we've doubled up. Now, I'll go through these in a second. I'll show you the complete list, but basically all we're doing here is changing one factor. We're looking at how much we can optimize this stop loss. So let's see the results in a second to see how this change in strategy rules affects the overall results. So now we've got the results from testing with just a 1 ATR value from the entry to the stop loss. And just to compare basically quickly, only one of our results actually changed in terms of where the maximum profit was achieved, which I believe was this trade here. Yeah, this trade here changed. We got a smaller max profit out of it, but because we tightened the ATR, it was still a larger maximum R achieved. And as you can see, most of the times before, when we just had a maximum or at least an MFE value of around 1R, now we can see that potentially 2R is going to be the optimum area. If we look at the number of trades that would have hit 2R, this trade here, 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 and these two at the bottom. So the same number that would have hit 1R last time, but obviously we're doubling the R there, not because we're going for a wider profit target, but because we're halving our stop loss distance, which impacts obviously the R that we're achieving. So again, a very, very simple approach there in terms of what we want to test and the factor that we're changing within our journal. Instead of looking at, where's the MFE there, now we're focusing on where's that MAE. And it didn't take me too long to do this. Obviously, we haven't got a huge sample size there, but you can see, obviously, hopefully you can see there the impact and the power that changing one of these values does in terms of where you're reviewing your trade performance. And we can expand this out. Obviously, we could have a look at, okay, instead of using maximum profit price, what about going for, an ATR target for the profit? Having a look through elements like that. So something as simple as this can be really effective. Obviously, we'd need to gather a lot more data. 12 trades certainly isn't enough, but I think it's enough to visualize what we're aiming for here. And okay, there are more refined ways of doing it to achieve, more optimum areas, but in terms of a simple approach, just to test whether it's an existing strategy, you've got a lot of data you want to see, can I improve my R anyway, or it's a new strategy and testing like this. Just this kind of approach to have a look at maximum profit like this, and also looking at refining that stop loss. It can go both ways. You might need to make your stop loss slightly wider to incorporate more trades as a win. If you find you're getting stopped out repeatedly, then that's an option as well. If we were seeing this and maybe the 1 ATR value, if we'd started at that point and we were seeing lots of losses, I maybe would up it to the 2 ATR to see if that would achieve more, hopefully achieve more wins and therefore be a better payout for the R. But however you're approaching, your strategy information, if it is existing rules, if it's a new strategy testing, have this as a focus. Doesn't take too long to do. If you've already got the data there, perfect. Okay, going back through the charts is a little arduous, but it's worth the time in the end. So in very simple terms, guys, comparing the two journals side by side, only changing that one factor in terms of the ATR, it's quite easy to compare results. And we would always want a much larger sample size than this. But in general, if we're looking at results, here with the 2 ATR value as our stop loss distance, we've got a +6 using the 1R and a -6 if we're going to go for a 2R trade. On this side, just using the 1 ATR, we've still got a +6 of 1R, but if we use the 2R target instead, we've got 15 across these trades. So 15R compared to -6. So again, very small sample size, guys. Don't take this as go out and trade this strategy. Obviously, this isn't even a strategy, something I just came up with while putting together this video. But I hope it visualizes, quite easily that you can see how important it is to check this MFE and this MAE value. Don't neglect them. Don't think, it's too simple just to do that. It could be as simple as just changing one factor like that. Obviously, gathering an awful lot of data, as I've gone through multiple times this video, is the key point there. But if you have a lot of data, or if you're testing a strategy, get that data collected, then start to look at different sectors to refine when focusing on that profit and that loss. So guys, in summary there, that's what we want to focus on when we hear the words MFE and MAE. We don't want to think, it's going to be too complicated, it's just nonsense trading jargon. What we're looking at there is a genuine way to improve your trading performance, check your strategy results, and refine a simple area to obviously, see if we can squeeze a lot more out of our trading. With that being said, if you'd like to learn any more about mechanical trading, how we trade, links are in the description if you'd like to book a call with one of the team to talk about kind of our trading strategies, our performance, how things work, and how we could help you improve your trading. Links are in there as well. And with that being said, though, guys, thank you very much for watching. Hopefully that was useful. Hopefully it's improved your trading, and look forward to seeing you on the next video. Take care.